Christian, let's come back to you. A couple of questions you can answer in any order you like. What are we going to do with the DATs that are seriously underperforming? I personally have concerns that they could be quite damaging for the industry in itself. We have DATs out there that are trading significantly below where they should be, partly because of maybe the reasons that you've already mentioned. But will these DATs perhaps become M&A targets themselves, or is there a way for them to recover before that happens?
It's a great question. I definitely think there's going to be M&A. Still early in the cycle. I think for those who have participated, it's probably felt like 8 years that we've been in DATs, but it's been 8 months. And as a matter of fact, there hasn't been one SPAC DAT that has actually closed and is trading, freely. The DATs that have closed have been more like the pipe deals where you go issue a bunch of stock at the market. Why is it underperforming? I think lack of liquidity. Early on, there were only a handful of DATs and the market available to those DATs was kind of fixed. I think today that market size for DATs is probably similar, if not lower because of their performance, but way more DATs. So kind of the trading volume per DAT is lower than it was 5 to 6 months ago. So that's kind of why you're seeing that loss of liquidity, loss of volatility in the equity capital markets for some of the DATs. But that presents opportunities for the ones that are performing well, right? So I think like any industry where there's a boom, folks take the opportunity to take advantage of the markets when they're open to them. There's going to be winners, there's going to be losers, and ultimately a good way to acquire coins without necessarily moving the market is through equity swaps. So like even if you're trading, there's two DATs, let's call it sold DATs, one's trading at 0.9, one's trading at 0.7. The one who's trading at 0.9 could acquire the one trading at 0.7 for 0.8, and it's accretive for both. And it's a good deal. And ultimately that will accrue, and then you hire folks like Figment to go do yield strategies, lending strategies, et cetera. There will be winners. But I do think ultimately in the topic of closed-end funds, like BDCs, we talk about that a lot. These are permanent capital vehicles, or supposed to be permanent capital vehicles, and they act a lot like closed-end funds. Ultimately, I think they're going to have to find other ways to generate value and yield to overperform, because it doesn't really make sense for a digital asset treasury to trade much above its NAV, right? Unless it is generating some yield. But a 1.5 NAV or a 2-point NAV isn't really fundamentally sustainable over time. And so how else can you generate value? I think folks are starting to add their own validators. Some people are talking about like the Berkshire Hathaway of the DAT. So buying operating businesses that are generating cash flow, that natural cash flow, not necessarily, crypto or, DeFi cash flow, to actually accrue more of the token over time and diversify.
Can I just add a point on that? Because I was at Strategy World earlier this year. And I think the one thing that really surprised me at, MicroStrategy now being like the largest DAT, I ran into people at the conference that were there for Strategy's software and knew nothing about Bitcoin. And they're like, the Bitcoin piece is really interesting. I'm like, I didn't realize there were people here. I mean, the whole conference is orange. The whole conference is pro Bitcoin. And there were people there that were actually there for the software. So it's interesting to your point on actually having these cash flow generative businesses. Maybe it's not the greatest example, but it was still quite fascinating to me that there are these companies that have businesses and they're able to buy that with the cash flow that's kicking off from their businesses.
It's happening live. We're fielding questions from DATs who are our clients or otherwise, who are like, hey, do you know any business out there that would sell to us? Because we want to generate more. It's hard, especially Bitcoin. Bitcoin doesn't have a native yield like, a proof of stake protocol like Solana or Ethereum. You have to go out and do some more esoteric synthetic strategies. The more simple one is lending. You could, sell covered calls. A lot of people do that, and maybe some more unique things that Anchorage you guys help put together. But it's a very, very live and dynamic situation. People thinking about what's the next step, because while there will be M&A, people aren't ready to throw in the towel, right? It's only been 8 months, and it's nice. You have a nice salary. You also, I think there's a point of pride and ego where you just raised 200 million or 500 million from investors, and throwing in the towel this early seems, like you're giving up too quick.
And with some of those, the ones that you worked with that have had the big pipes, are they already coming back to you? We need to raise more. And then what would you say to them if they're really underperforming?
I tell them it's a tough market out there, and you're going to have, you got to find ways to bring your MNAV up. I think it really depends on what the DAT is. If it's a Bitcoin DAT, Bitcoin is fully liquid. there's an ARB opportunity there for investors. But there's also technical overhang. Like some of these DATs raised, to your point, $500, $750 million. There wasn't enough liquidity for those initial pipe investors to sell out of their position. And what we ended up realizing ex post facto after the pipe raise was that these weren't really investors that financed the DATs. They were traders. They saw the quick buck, and they wanted quick turnover. High interest rate environment, DPI is more important. And people were trying to return cash back to their investors and flip to the next deal. So some of those people are still stuck, right? So anytime that there's a day of good volume and you start to find an investor base that picks up that discount, that tries to arb out that discount, you're seeing some of that pressure push down the price.